got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn up 3/4 at 464 3/4. July soybeans are up 1 3/4 at 1241, and July Chicago wheat was down 3 3/4 at 694 1/4. Good morning, guys. I hope everybody's doing well. We've got to the end of the week here, coming into a 3-day weekend. Markets will be closed on Monday during the day. We'll reopen at 7 o'clock Central. Dustin, maybe a few thoughts to wrap up the week, and we'll throw it around the room here.
Yeah, thanks, Dan. We are going into long weekend. We will see COT data this afternoon, see what the funds have continued to if they've continued to buy out of corn, or if they stalled or went back to adding shorts. It's been a very interesting topic just to focus on, because going into the turn of the year, we knew that it was a kind of a perfect storm where there's probably a lot of grain left over that wasn't sold. Growers had really good selling prices in early 2023. Cash flow was good in 23, and the need to raise cash probably wasn't really there going into the end of 23 into early 2024. So if you look at it in that lens, you're coming off of lows there in late Feb, right before the March first notice day. And that's right around the time that funds were, maximum short. They've been kind of pulling back on the shorts since then. And then we've seen commercial shorts grow. So that's why every Friday we're going to be focused on that afternoon report to see if that continues to change. And just kind of going back to, what is really going to be known in the next 30 days besides weather. There's really not, any new revelations on acres. We're not going to get that till the late June report. And we know that global balance sheets have been tightening for grains and rising for oilseeds, mainly projected to rise for soybeans. So when you look at what the market's been saying, we're at fairly high ratios, beans to corn right now. So I think it'd be interesting to see, like, the funds kind of took a step back out of corn shorts last week, didn't do that on beans. Maybe they're starting to do the same thing on the managed money side. So far, the ratio has still remained, at 2.5 or above in recent days. So I think that's my main focus, is not necessarily on flat price. It's how beans relate to corn. I think that's just a little bit better focus than flat price.
That's good stuff. Justin, a couple thoughts here. Just overall, looking at all markets across the board.
Yeah, I agree. I think it's, kind of more the relationship than the flat price. And I think there's a lot of debates on, what's the right flat price, which is so hard to know. Even if stocks to use, and, a lot of traders over the years have gone broke trying to say, we have this carry out that equals this price. Like, that just doesn't work. There's so many other things that matter. But one of the things that tends to, in my opinion, correlate much better is the relationship to the other commodities, and like what trend or which direction are they going. And soybeans has had a steady march higher on supplies going up. Obviously South America being the huge driver of that. It's just a hard trend to reverse. Just there's so many available acres to still come into production. And so, having a normal ratio gets more soybean acres every single year. Right. And to be towards the higher end, like, it's obviously going to speed that up. And then you throw in high input costs, high fertilizer from, started obviously with the Russia-Ukraine war, but just general global inflation. Like, anytime you have those high costs, we've talked about this for months and months, naturally favors soybeans, or crops that are cheaper to plant. So all these combinations, what's that?
High interest rates too.
Yeah, absolutely. So all those kinds of things, I think are starting to materialize here that we've been talking about. And so, yeah, I don't know what flat price does. I could, obviously we don't know what weather is going to be either. So I don't think anybody can tell you, but, I think looking at just the fundamentals, and if we were to have, we'll call it normal, I don't know that we're going to have record crops of everything. You can't really make that assumption today, but if you had a good corn and bean yields here, I would say that beans look quite overvalued. With what we have written down and the demand assumptions of picking up another 200 million plus demand, I think it's tough at these prices with the competition that we have in South America. Well, I feel a little opposite, that we're we're already selling at these prices aggressively. We're competitive in the world market. Our exports have been good. Ethanol's, slagging slightly, maybe 50 million bushels off pace, but still very strong. We haven't rationed anything in corn. So
yeah, I was gonna ask Justin. It seems the more and more we discuss, the corn balance sheet, the the friendlier it gets. I mean, you were referencing wheat this morning, just in terms of global feed consumption for wheat and the relationship between corn and wheat at this stage. And if you were to pick up any of that demand on the balance sheet, I mean, you continue to get into a tight scenario, or a tighter scenario in the corn side of things, don't you?
yeah, I mean, we feed 150, 160 million tons of wheat globally.
Mm-hmm.
That's a lot, right? So that's, say 20 million tons of that, just because we're at what, 2 or 3 times that we've been this high wheat over corn, in the last decade or so. So even if you took 10% of that demand, you're looking at 15 million tons. That's 600 million bushels of wheat of feeding globally. So that's kind of the job of the market. It gets these relationships out of whack. All the global users kind of respond, look for substitutes. Look at soybean oil. I think that's a great example of, and it took me by surprise. I mean, these aggressive biodiesel facilities, on paper, we should have run out of oil, and the market responded and found every loophole, that's another, thing that we've talked about, that probably should be shut off, but, use cooking oil, any kind of substitute, that they could for that feedstock. Wheat's an even easier one when you're talking about feeding, to switch back to coarse grains. So I think all those things happen. And, we talked about, sometimes you can go from a bearish environment to a bullish one with a lot of little things happening. It doesn't have to be this, 2012 drought. It could start with, you found a level of demand and you cut production a little bit, and, so on and so forth. So again, not a raging bull by any means here. I just think there's more bearish things in corn.
There's a path
when you look at the relationships. So
sure. Well, it is pretty incredible how the tone has flipped a little bit in the last 4, 5, 6 months, because it was, it was tough there for a while with that.
Well, producer had their head held underwater, right, with a very large unsold position on. And I think we've been working through that quite aggressively. I think around these levels, 475 to 5, or even, have been sold really aggressively, getting caught up on old crop sales, selling new crop. Now you're starting to hear people talk about, need to sell 3 years out. So, that you caused a lot of pain on that break, from 6 to 4, a lot of pain. And so I think market's kind of dealing through that. We've found a level where farmers willing to sell, and the buyers, we've attracted enough buying here. And we've had that big flip from managed money to commercial ownership, on this rally, right, where the commercial's been aggressively selling, via the farmer, and the managed money's been covering their short. So I think we're in a really good equilibrium here. The market's really cleaned up. We've talked about this now. See where we go from here, but it is attractive that every time we have a 10 or 15 cent pullback, we seem to do some good corn sales.
Yeah, absolutely. Ben, thoughts from the East here this morning?
Yeah, I think Dustin brings up a good point about we're kind of void of any big data here for a little bit. If I was looking out on the horizon of something that would be concerning to me, would be the acreage report. I think that we can all make a compelling story of why we should see more beans and less corn. But I think answering the question on where the total acreage pie went is kind of the one that sticks out as being problematic to me, to maybe, to potentially be something that could derail what we see as a supportive corn market today. So that's a data point that is concerning to me, right?
You're saying like it could rise, right? Yeah, there's a possibility.
Yes, I think that everything that I see tells me that it shouldn't. But having humility and being around markets for a long time, that's the one thing that I see off in the corner of the room that bothers me. So I think that, that idea of plan A, plan B is really important into that time frame. So
yeah, I agree completely, Ben. I don't believe that corn acres will rise. I think beans will. It's my personal opinion.
Yep.
Right. It's purely spec opinion. But you're not going to get that confirmation till June, late June there. So going into that typical seasonal time frame, like the idea to build some sort of fallback plan and still hope for the best, that prices continue to go higher. Like that's obviously, an approach that we support, is just what can the producer handle for risk and reward. So I don't disagree, but I will add in there, we had huge corn acres last year and very, very low bean acres. So I would think the natural rotation still goes that way. That's my spec opinion.
I agree.
But yeah, you're always right. We don't want to give that impression that corn acres can't rise.
Yeah, that's when you get kicked in the face when you're really confident. So,
well, and I think that we're in a phase too. These the environment we've had has not been one that's been a straight line shot like wheat. It's really kind of been a grind and a back and fill and a grind. And I think that we have to get the Davy day trader person who likes to figure out that you can sell grains every day and make money, or sell corn every day and make money. And for a long time, it's been buy dips and beans and make money. I think they're the first ones that have to kind of get their hands slapped in order to get a little bit more of a positive price action, maybe a little more aggressive. So, when you look back just over the last 2 weeks, we failed at the 200-day after probing through it. And I'm sure there was, plenty of automated traders and traders that said, well, you got to sell corn here because of the 200-day things that we've talked about on here. But hopefully in time, that can kind of go the other way, where all of a sudden they realize, hey, I'm not making money selling corn and buying beans or selling whatever. And they start to realize that I'm on the wrong side of this, and then they want to push it the other way. So I think that the market's trying to figure itself out, and it's in a tough spot because seasonally, it tells you that May, June, early July is typically your seasonal window. So,
yep. Well, I was gonna say, wheat honestly is a good example. I mean, a lot of these what was perceived as bullish fundamentals now after we've rallied so much, those were happening as we were making contract lows in March and April.
Yep.
So a lot of those things that we're talking about now were completely ignored. Then once the price turned up and looked good on a chart, all those things came to the forefront.
Yeah. Well,
so markets can ignore a lot of things for longer than you can, stay sane, right? The saying.
And I think that the historical nature, if you go back and look at years where wheat's had some really big rallies, there's a lag before corn will kind of grab onto it. And I think it's the realization of exactly what you said. People will start to switch to corn for feed at $2, $2.50 over. And then the benefit to corn becomes apparent because they have to stay out of wheat. It doesn't pencil. It's much harder to source. So, that lag there, I think is something to be realistic about, and for your decisions moving forward of how you want to market your grain.
That's all good insight there, guys. We got a couple minutes as we come into the open here. Rylan, let's put a bow on the week for cattle. We got cattle on feed out 2:00 Central this afternoon.
Yep. Paused a little bit yesterday. It just looked like you got a little bit of tired action. Everybody kind of came in to buy it this week. Cash market is absolutely on fire, especially in the north. We saw trade all the way up to 192 in some areas for live and 302 for dressed. So that train just has not stopped. And you can kind of see it. This rally kind of came out of nowhere. I think this one caught a lot of people off guard just because they didn't think the Packers really wanted to spend so much money here, but here we are. So we'll see what the data says. A couple points just to consider is that there's 2 extra marketing days in April this year than there was last year. So it's definitely going to skew some of the data. So, some of the numbers may look a little bit, or the percentage decreases or increases may look a little bit more extreme. So just something to keep in mind as we look to that. But otherwise, yeah, we'll just see what the data says. We've been on a really nice rally. Cash is up, and we got the discount on the board. So I think that's really where the focus is going to be going into Monday.
Very good. And we will have our reaction to the cattle on feed in our afternoon commentaries, in addition to probably visiting about that on Tuesday when we reconvene for the War Room. It's Friday. And that's what everybody looks forward to. It's Brian Williams Fun Fact Friday. So what do you got for us, Brian?
Thanks, Dan. Happy Memorial Day weekend, everybody. Just to take a moment to thank all our military out there for their
Amen.
service, and also, take a moment to honor those who gave the ultimate sacrifice fighting for our freedom. It's a somber weekend, but at the same time, on the lighter note of things, 65% of Americans will be looking to barbecue this weekend, but also comes with a increase of 25% of home cooking fires. So Johnny, you might want to take that grill out of the house when you start it. So I thought that was an interesting fact. And then also 818 hot dogs will be consumed every second from Memorial Day to Labor Day. That is 7 billion hot dogs.
By hogs.
Consumed. Wow.
There you go.
Heartburn just thinking about it right now.
Get long, yeah.
Yeah.
Time to get long.
Yeah. And Ryland, it's no longer a faux pas to wear white, so you can go back to your white cut-up jean shorts for the summer.
I've been waiting. Finally.
So happy Memorial Day, everybody. Be safe out there.
It's good stuff.
That's
And
good stuff, bud.
Chuck from Northwest Illinois, happy Memorial Day. Have a good weekend. Nick, thanks for the comments. Brian Williams always imparting that old school trader philosophy to us. Anyway, we got open markets here. July corn's up a half, 464.5. July soybeans are up a penny and a quarter, 1240.5. And July Chicago wheat's down 2.5 now, 695.5. Once again, just one thing to note: we will be closed on Monday. Markets will be closed in observance of Memorial Day. They will reopen 7 o'clock Central Time. War Room will be back on Tuesday morning, 8:15 Central Time. And every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. We hope everybody has a great weekend. Stay safe, and we look forward to talking to you next week.
Yeah, great weekend.